All right, buckle up, because today we're diving deep into SOXL.
Yeah,
This one's a triple leveraged ETF tracking semiconductor stocks.
that's right.
And you know what that means?
Volatility.
Exactly. Big swings, sometimes up to 90%.
Definitely not for the faint of heart.
So is SOXL a gamble or a golden opportunity?
Well, that's what we're here to find out, isn't it?
Absolutely. But before we get into all that, let's give everyone a quick overview,
Set the stage.
Yeah, exactly. So where do things stand with SOXL right now?
Well, right now, December 8th, it's trading at $29.61.
Okay, and how does that compare to, like, its recent performance?
Well, it's slightly above its 20-day simple moving average.
The SMA.
Yeah, that's hovering around $29.37.
Okay, so for our listeners who might not be super familiar with all the technical terms,
Right.
can you break down what that SMA actually tells us?
Sure, it's basically an average of the closing prices over the past 20 days.
Okay.
It smooths out those daily ups and downs and gives us a better idea of the overall trend.
So in this case, being slightly above that 20-day SMA means,
It's just some mild upward momentum, it's a little bullish.
okay, so we've got this short-term trend indicator.
Mm-hmm.
What else are we looking at?
Well, we're also looking at the 14-day relative strength index.
The RSI.
Exactly, and that's sitting at 44.73 right now.
And just as a quick reminder for anyone who's not totally up on their RSI,
Yeah.
what does that number actually mean?
So the RSI measures how much the price has changed recently to tell us if a stock is overbought or oversold.
Okay.
So an RSI of 30 or below, that usually means it's oversold, time to buy maybe. And above 70, well, that could mean it's overbought, so maybe time to sell.
Got it.
And for SOXL, that 44.73, it's pretty neutral.
Okay, so no strong signals there either way.
Not really, no.
So we've got the price, the SMA, the RSI. What other technical indicators are we looking at?
Well, support and resistance levels are key.
Oh, right, kind of like the boundaries for the stock price.
Yeah, think of them like battle lines between buyers and sellers. Support is that price where buying is strong enough to stop it from falling further.
And resistance is the outlier.
Exactly. That's where selling pressure kicks in to prevent it from going higher.
So where do those levels stand for SOXL right now?
Right now, our analysis is showing support at $28.36 and resistance up at $31.10.
Okay, so if SOXL breaks below that $28.36 support
Could signal a bearish trend.
and above $31.10 resistance,
That could mean further upward momentum.
so these levels are really important for understanding where SOXL might be headed.
They give us a framework, a way to anticipate potential moves.
All right, so we've got a good grasp on SOXL itself, but we also need to zoom out a little, right?
Absolutely.
What's happening to the semiconductor industry overall?
Well, it's a pretty good time for semiconductors, actually.
Yeah.
But it's a cyclical industry.
Right, it has its ups and downs.
Exactly. So it's important to keep that in mind because SOXL is a 3x leveraged ETF.
Right, meaning it magnifies those industry trends.
Exactly, which is why understanding the big picture is so crucial for anyone looking at SOXL.
All right, so before we go any further with SOXL, I think we need to take a closer look at what leverage really means.
Definitely, especially for an ETF like this.
And we should probably touch on some of the risks involved too, right?
Absolutely. Risk management is key when you're dealing with leverage.
Okay, so let's take a quick break, and when we come back, we'll really unpack what it means to invest in a leveraged ETF like SOXL.
Sounds good.
Welcome back. We were just getting into the whole concept of leverage before the break.
Yeah, it's a key part of understanding SOXL.
Definitely. So can you kind of break down what it really means for investors, especially with a triple leveraged ETF like this?
Sure, think of it like this. You're buying a house, right?
Okay.
And you take out a mortgage.
Yeah.
That mortgage, that's leverage.
Okay, so you're using borrowed money to increase your buying power.
Exactly. And it lets you buy a bigger house than you could with just your own cash.
But of course, that comes with more risk.
Absolutely, because if house prices go down, you lose more money.
And that's where the 3X comes in for SOXL.
Right. It means those gains and losses are amplified. So if the semiconductor industry goes up 1%, SOXL goes up 3%.
But if it goes down 1%,
SOXL drops 3%.
so higher potential reward, but also higher risk.
That's the trade-off with leverage.
Okay, that makes sense. Now, our analysis also mentioned some put options plays that could be interesting here.
Yeah, put options can be a way to potentially profit from a downturn or at least protect yourself from losses.
So before we get into the specifics of these options, can you just give a quick explanation of what put options are?
Sure, imagine you're worried about the price of SOXL going down.
Okay.
A put option gives you the right, but not the obligation, to sell SOXL at a certain price called the strike price.
Great.
So if the price drops below that strike price, You can exercise your option and sell at the higher price, limiting your losses.
Got it. So it's kind of like an insurance policy?
Yeah, you pay a premium for that, right? But if the price goes up instead, you just let the option expire and you're out the premium.
So it's a way to manage risk.
Exactly.
So what specific put options did our analysis highlight?
Well, there are two that look interesting.
Okay.
First one is a short-term play, expires on December 13th.
Good.
Strike price of $29.50.
And what kind of potential return are we looking at there?
The analysis suggests a potential annual return of 267.3%.
Wow, that's a big number.
It is, but remember, higher return means higher risk.
Right, so what are the chances of actually hitting that?
The probability of profit is estimated to be around 50.3%.
So basically a coin toss.
Pretty much.
All right, and what about the other option?
This one's a bit more conservative, expires on December 27th.
Okay.
Strike price of $27.50.
And a potential return there.
Lower, but still pretty good, around 102.3% annually.
And the probability of profit.
Higher, estimated at 60.8%.
Okay, so lower return but slightly better odds.
Right, it's all about finding the right balance for your risk tolerance.
Now, what are some of the things that could affect whether these options actually pay off?
Well, one big one is implied volatility.
Okay, I've heard that term before, but can you explain what it actually means in plain English?
Sure, it's basically how much the market thinks SOXL's price will move in the future.
So if everyone thinks it's going to be a wild ride, the options will be more expensive.
Exactly, because there's more potential for big gains or losses.
So implied volatility is something to watch closely.
Definitely.
And what about just the overall market conditions, like what's happening in the semiconductor industry?
Oh, absolutely. That plays a huge role, too.
Like if there's some unexpected bad news for the sector.
SOXL could drop significantly, which would make those put options more valuable.
But if the industry keeps doing well,
those puts might expire worthless.
So it's all interconnected. SOXL, the semiconductor industry, the overall market.
It's all part of the bigger picture.
All right, so we've talked about the potential rewards of these option strategies, but let's be real, there are risks too.
Of course, no investment is without risk.
So what are some of the things that could go wrong here, especially with SOXL being so leveraged?
Well, one obvious risk is that SOXL could just go up.
Right, if the semiconductor sector keeps rallying.
Those put options would lose value, and you could lose your investment.
Okay, that's a big one. What else?
Another risk is time decay.
Time decay, what's that?
Well, options have an expiration date, right?
Yeah.
As that date gets closer, the value of the option usually decreases, especially if it's out of the money, meaning the strike price is higher than the current market price.
So even if SOXL doesn't move much, you could still lose money just because time is running out.
Exactly. It's like a ticking time bomb.
Okay, so we've got the potential rewards, the potential risks. Let's talk about risk management. What can listeners do to protect themselves?
That's a great question. Risk management is crucial, especially with leveraged ETFs.
So what are some strategies people can use?
Well, one of the most important things is position sizing, meaning how much money you put into SOXL. Because of the leverage, you want to be more conservative with your investment compared to a regular ETF.
Don't put all your eggs in one basket.
Exactly. Spread the risk around.
What else can people do?
Another key strategy is setting stop-loss orders.
Stop loss orders, can you explain those?
Sure, it's basically an instruction to automatically sell your SOXL shares if the price drops to a certain level.
So it limits your losses.
Exactly. It prevents a small loss from turning into a big one.
That sounds like a good idea, especially with a volatile ETF like SOXL.
Absolutely, and it's important to place those stop-loss orders strategically, like at those key support levels we talked about earlier.
Right, those levels act like guardrails.
Exactly.
Okay, so position sizing, stop loss orders. Any other advice for managing risk with SOXL?
Well, the best advice is to do your research. Don't just rely on what you hear on a podcast.
Yeah, knowledge is power.
Exactly. Look at SOXL's historical performance. Understand the companies it tracks. Really dive into the semiconductor industry.
And stay informed about the broader market, too.
Absolutely. Things change quickly, so you need to stay on top of it.
And be honest with yourself about your risk tolerance.
That's so important. SOXL can be a roller coaster. Make sure you're comfortable with that before investing.
All right, we've covered a lot of ground here. Leverage, options, risk management. I think it's time to wrap up our deep dive into SOXL.
Yeah, it's been a great discussion.
We've looked at the potential, the risks, the strategies. Hopefully, this has given everyone a good foundation for understanding this unique ETF.
And remember, this is just a starting point. Do your own research, consider your own circumstances, and make informed decisions.
And if you decide to take the plunge into SOXL, good luck and happy investing.
Cheers to that.
So we've talked about a lot with SOXL, the leverage, the options, the risks.
Yeah, a lot to consider.
But I guess it all boils down to one question, right?
The big one.
Is SOXL right for you?
Exactly. And that depends on a lot of individual factors.
Like what?
Well, first and foremost, your investment goals.
Right. What are you trying to achieve?
Are you looking for short-term gains, long-term growth, retirement savings?
And how much risk are you comfortable with?
That's huge, especially with a leveraged ETF like SOXL.
It's not for the faint of heart,
No, you got to be okay with the possibility of losing money.
because it can happen, especially with the volatility we've been talking about.
Absolutely, and you have to be realistic about how much time and energy you're willing to put in.
Right. SOXL isn't a set it and forget it kind of investment.
Definitely not. You need to stay informed, monitor the market, keep up with the semiconductor industry.
Because that industry, it's constantly changing.
Absolutely. New technologies, new companies, new challenges.
So you really need to do your homework before diving into SOXL.
It's not just about understanding the ETF itself.
Right. You need to understand the whole ecosystem.
The companies it tracks, the industry trends, the overall market conditions.
Okay, so you've done your research, you've thought about your goals and your risk tolerance, and you've decided SOXL is a good fit.
Great.
What's next?
Well, before you buy any shares, make sure you have a solid risk management plan in place.
Right, we talked about some strategies earlier, like position sizing and stop-loss orders.
Those are crucial.
They can really help protect you from big losses.
And don't forget about diversification.
Spread the risk around. Don't put all your eggs in one basket.
Exactly. Make sure SOXL is just one part of a well-balanced portfolio.
All right, I think we've covered just about everything there is to cover with SOXL.
It's been a great deep dive.
We've explored the potential, the risks, the strategies.
Hopefully everyone listening feels a little more informed about this unique ETF.
And remember, this is just a starting point.
Do your own research, consider your own circumstances, and make the best decisions for you.
So whether you decide to invest in SOXL or not, we hope you've enjoyed this deep dive into the world of semiconductor stocks.
It's a fascinating industry.
Definitely. And one that's constantly evolving.
So stay curious, stay informed.
And most importantly, happy investing.